Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Welcome to this week's episode of the Prime Property Finance Podcast. Myself, Gareth Morgan. And this week's episode, I'm going to talk a little bit of detail in this one, actually, following on from the interview that I did with John McCaffrey of Alexander & Co., where we talked about different tax strategies and interest rates and product fees. I thought I'd just dive a little bit deeper into that and just go into some options that are available in the market right now and the benefit that you might get. So if you are looking to purchase a property right now or are thinking about doing it in the future, or if you're looking to remortgage a property on an investment property, I've just shown a few examples of different deals available from lenders and some of the considerations that you would look at when trying to choose the correct deal for you, and then also what the tax implications of that may or may not be. So take a listen. And if there is too much detail, then please reach out and we can try and push some more detail through to you. But if you haven't already listened to John McCaffrey's interview, then please do listen to that as well. So let's take an example. I want to jump straight into it and discuss some of the different options that are available in today's market on a limited company purchase. So if we were looking at a purchase of 200,000 and a 75% loan, and we are considering it's a purchase in a limited company, then there are a few different options available. And I'm just going to pick on one lender in particular just to show what this looks like in reality. And so the difficulty is in a huge market space where there's so many options available, and just trying to navigate all of those options, just to give you an idea of the challenges facing us as brokers and also you as clients on trying to decide what the best deals are out there. So as an example, if we look at this deal where it's one lender and there are 4 products available at 75% loan to value at a fixed rate, a 5-year fixed rate. So the cheapest rate is a 4.67 rate, and that has total fees of arrangement fee of 4,500. Then the next best deal is 4.97, and that does an arrangement fee, a fixed fee of 3,995. It's also close to 4,000. The next best deal to that is 5.12%, so it's gone up a little bit now over the 5. And that's got a fee of 1,495. Again, that's a fixed fee. And then the final rate is a 5.27, another 1.5 basis points. And there's no arrangement fee on that. So you can see there's a percentage fee, which is the first one, which is a 3% arrangement fee of the loan, which in this instance is 4,500. Then you have 2 fixed product fees at 3,995. and 1,495, and then an option with no arrangement fee. So following on from the discussion with John, the tax specialist, generally what people have to make a decision is what is the best deal to them over a certain period. Obviously in this example, it's a 5-year period. And you'd be faced with which of these deals is the best for me. Now, if you look at these in isolation, then the best deals are either the one with no fee whatsoever, or the one with the 3% arrangement fee. So 3% of the loan amount or no fee whatsoever. Those two, both on this deal, work out the best. And they are exactly the same in terms of costs over the term of the mortgage. So then you just really trying to make a decision on, well, one is 583 a month, but the other one is 658 a month. Now, by choosing the 583, which is the lower rate, one, you're going to get better cash flow, which is great from the property, but also the ability to potentially offset the mortgage arrangement fee against your income at 4,500 is also another great benefit. So whilst they seem the same, actually, when you get tax advice, it might turn out that you'd be better off taking a higher fee and getting a lower rate. You'll benefit from just better cash flow, but also benefit from being able to reduce your taxable income. So that really does stand out as the best option in this example. Now, it isn't always the case that a deal with no fee or a high fee are specifically the best, and I want to just give an example of this. If I change the deal that we're talking about here from a purchase of 200,000 and a mortgage of 150 to a purchase of 600,000 and a loan of 450, then it's still 75%. It's still a 5-year fixed rate. It's with the same lender. Everything stayed the same. The rates are the same. The arrangement fees are the same. However, which deal is now best is actually the 4.97, which has a fixed fee of 3,995. The second best deal is the 5.12 with a fixed fee of 1,495. And then the third best option in terms of the total cost over the period are the one with no fee and the high fee. So again, you're going back to making a decision based on your individual circumstances, what your property purchase price is, what the numbers show, and the importance of making sure you're getting the right advice. So out of these two, you might then select the lowest one, 4.97, so that it's the best deal over the period, plus you'll be able to get some of the benefit of being offset the 3,995 arrangement fee. So I fully understand that I've covered a lot of detail there, but the point I'm trying to get across is that there are lots of options available. This is just on the basis of one lender on a 5-year fixed in a limited company at 75%. There are so many variations. Obviously, there's a whole host of other lenders. There's options at 2 years, 3 years fixes, potentially trackers, lower loan to values, or higher loan to values, which will give different rates. But the point I'm trying to stress is, following on from the episode with John, where we discuss a lot of tax strategies, is trying to understand for your own purposes, what does a good deal look like from a mortgage perspective? And there's sometimes more things to consider than just the rate itself and which is a low fee and which is a high fee. So hopefully that's been of use. It's short and sweet, but just kind of wanted to try and go into a little bit more detail. If you've got any questions on any deals or wanted to understand what structures work best for you or what rates and comparisons, then more than happy to have a chat about them and see how we can help. But do take the time to consider all the different options, and also how not just the gross rent minus the mortgage payment affects your cash flow and your business, but how does the tax implications, how are they involved in it as well? Hopefully that's been useful. If you know anyone that might be of interest in understanding a little bit more about this, please do share it with them, and we'll catch you on the next episode. I really hope you enjoyed that episode. A little bit different to what we've done before, and obviously there's a lot of detail involved. So if you weren't with it, then please reach out to us and we'd be more than happy to have a chat with you about it and hopefully try and explain that in a bit more detail. But other than that, look forward to catching you again soon. Thanks for listening.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested, and of course subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.